I'm joined today by Vernon and Maneesh Bajaj, fund managers on the Brown Advisory US Flexible Equity Strategy. Thank you very much for joining us, guys.
Pleasure.
The Brown Advisory is a big name in the US, but it's less well known over in the UK. So what can you tell us a little bit more about the company and what you do perhaps differently?
Sure. Brown Advisory is an investment advisor. We work with individuals and institutions in the US and here in the UK as well as Europe. Maneesh and I are over visiting with investors this week. We have many strategies. The particular strategy that Maneesh and I work on is the US flexible equity approach. We look for businesses that we can own for a long time that have attractive characteristics, and we seek to buy them when the market, because of volatility, because of changes that are ever going, presents them as sort of a bargain, and we look to compound our return for investors, beat the market averages, because we have good businesses that we've bought at attractive prices, and the two together lead us to have good returns over time.
Rising wage inflation in the US has spooked the market recently. Is that set to continue? Can the market recover from here?
Maneesh, do you have some thoughts?
Absolutely. So the rising wages and the expectations that inflation rate is going to go up, I think generally is positive. And the reason I say that is over a last 8-9 year period, the central bankers have been so focused on trying to fight deflation. And generally there is worry about stagnation in wages for the average US worker. So largely, both these things going up is positive for the economy. Now, we did have a violent reaction in the market, but that was primarily because of some leveraged bets that investors had placed. And if there is a sudden movement, which then causes disturbances, but if this news of rising inflation or rising wages is a measured one, we should be fine. It should not be a problem unless it's a violent move. That's my thoughts.
And we've had such a strong run in US equities since the end of the financial crisis. Can it continue? Is there still some good value in the market?
Markets have been very strong recently, up until February, where there was some volatility. That is likely to continue over time with the volatility that comes. But the important thing is to be in the markets over time and let that compounding effect be beneficial. So equities can return, if you look at the last 10 years, equities returned about 8.5% per year. Our outlook going forward would not be quite as high as 8.5%, but it should still do substantially better than having your money in a short-term deposit or in a bond. Equities are much more attractive than buying fixed income.
Great. Thank you very much for joining us.
Thank you.
Pleasure.